This is Darren Carlett with the Bull Strangle newsletter and SpreadEdge Capital. This is a performance review for the trades that closed this past Friday. This is a brief overview of the strategy. As an introduction, this strategy entails buying a stock and selling both a covered call and a cash secured put, or what some call a naked put, both of which are out of the money. The goal is to earn option premium while maintaining controlled stock risk. Here you see kind of how the trade is constructed. You can see that we're buying stock in 100 share increments, and then we are selling a call above and a put below. The range in between is kind of a style thing. People may want to keep this tight, which gets you more option premium, or you get a little looser and have the opportunity for more stock upside. The strategy combines three strategies into one single position. Obviously, the long stock, which allows you to participate in price increases. You have the covered call, which limits upside potential in exchange for receiving premium. And then you have the naked put, which generates income while creating an obligation to purchase additional shares. Now, I have 5 videos on YouTube that describe this strategy in more detail. The first one is a little less than 10 minutes, and it provides a pretty high-level overview of the strategy. And then there is a 4-video series that covers all the topics below. In total, these videos are a little less than 4 hours of content and thoroughly explains the strategy. So it starts off with an overview of stock options. It goes through then in video 2, the strategy. Video 3 is about the risk optimization elements of the strategy. And the 4th video describes the contents of the newsletter, which is published each week. You can find these videos on YouTube and search for SpreadEdge Capital. This provides a high-level overview of the core elements. Obviously, the most important part of the strategy is to pick quality stocks. And we're looking for stocks that are technically strong, using time-tested stock engine and a variety of different parameters that help us to get to stocks that are great candidates for covered call and naked put writing. We are sellers of option premium, which does give you the obligation to sell your stock at a set price and the obligation to buy additional shares at a set price. We talked a little bit about how the trades are constructed on the previous slide, but bottom line is we're buying shares in 100 or stock in 100 share increments and selling a call above and a put below. We're leveraging a weekly option cycle where we are on Monday placing trades that will expire 4 Fridays later. We are looking at the market environment and trying to be heavily invested during what we call green episodes, or times when the market is strong, and we are going to back off when the market isn't as strong. And we are very focused on diversification across sectors, across stock price, and across implied volatility. So that's a real quick overview of the strategy. As mentioned, you can go to my YouTube channel, SpreadEdge Capital, to get a lot more detail on the elements of the strategy. This past week, the S&P increased by 1.6% for the week and closed at another new high. So with this very strong performance, the market environment continues to be green. Actually, I'd say bright green. And of course, that would mean a full investment level. This slide illustrates how the option premium impacts the total profit. This analysis includes 367 trades from February 2024 through August 29th. The data set is sorted high to low by stock gain percentage and then is divided into 20 equal buckets. On the left compares the stock gain to the trade gain, and recall that the trade gain includes the stock plus the options. And on the right is the same data, except it's in table form. Note that when you break this down into the different buckets, the first 5 blocks represents where the stock gains are capped by the covered calls. This is 25% of the time. And you can see that, once again, you can't go above once you reach that call strike price, your gains are then capped. So in this case, the stock gains were quite a bit higher than the options. The next block, which includes 6 through 11, is where the stock gains are amplified by the call and put premiums. And in each of these blocks, we see that the stock and options is higher. And of course, the same is true for blocks 12 through 15. But in this case, we actually took and turned a stock loss into a trade gain. And then the next block is where the stock lost and the trade lost, but the loss is reduced by the option premium. And then the very last block, which is 19 and 20, this is where the naked puts actually worsen the trade losses. Now, this last area is, of course, the worst case scenario, but note that that occurs about 10% of the time. Now, looking at this at a little bit higher level, we see that 25% of the time the stock gains are capped by the covered call. We see that 65% of the time the option premiums improve the overall performance, and then just 10% of the time the naked puts actually worsen the trade losses. All right, when we start talking about the different variations, I think that I tried to design this in a way that really simplifies thinking about all the different components of these different variations. Bottom line is you can trade up to 8 different strategies, which accommodates a very wide range of risk profiles. So there's really 4 strategies, but you can also add protective puts to any one of them, which then doubles it to 8. Now, the way I like to think about this is that there's really just 5 different components that are used throughout any of the strategies, right? The first is buying stock in 100-share increments, and then there is selling a call above the strike, there's selling a put below the strike, there's buying a put below the sold put, which turns that naked put into a put credit spread. And then there is buying a SPY, which is a S&P 500 or a QQQ protective put, which kind of protects the broader portfolio, not an individual stock. Now, as you go through this, these components are the same no matter what your strategy is. So for example, every strategy includes the green block, which is the stock, okay? And then the others become a little bit interchangeable, right? So a covered call naked put would include the green, blue, and yellow blocks, and so on. And you can see how you just add these different components to change the strategy up. This building block concept is covered in detail in the videos, but for the purposes of this review, I want to kind of give you a very high-level overview. Bottom line is I'm tracking a number of different variations so that people can, alter the strategy to fit their risk tolerance profile. But when I'm reviewing the performance, I'm only going to focus on the core strategy, which is listed here as the number 1. It's the covered call naked put. And as I've already mentioned, it involves what I'm the green building block, which is the stock, the blue building block, which is the call sold above, and the yellow building block, which is the put that is sold below. Looking at our open trade summary, we'll start with September the 19th, which would be for expiration this next Friday. On this watch list, we had 20 trades. The trade win rate is 85%, so 17 of those 20. The stock win rate is just 60%, but the average stock gain is 7.4 compared to 1.8 for the S&P. And then the average gain when you add in options, and this is for just the covered call naked put only, is 7.4%. So we're actually sitting in very good shape here on this 9/19 expiration. Hopefully we can hold these gains through expiration. All right, moving on to September the 26th expiration, which would be 2 Fridays from now. On this watch list, we had 22 trades. The trade win rate is 86%, so 19 out of 22. The stock win rate is just 55%, but the average stock gain is 3.7 compared to the S&P at 1.9, almost 2 to 1. And then our average trade gain is also very strong at 7%. So again, another very good setup. And again, hoping to see just a continuation or holding of prices would be very, very nice. And finally, we have the October 3rd expiration, which would be 3 Fridays from now. On this watch list, we had 20 trades. Once again, there's 3 non-winners on the stocks, which has been the case on all 3 weeks. That's at 85%. Our stock win rate is just 50%. So again, we're seeing a very nice bump from the option premium. The average stock gain is 3.4% compared to the S&P at 1.6. So once again, we see about a 2 to 1 ratio. And then the average trade gain is 7.3%. So recapping all 3 weeks, all of them are sitting with very strong performance and could actually take a little bit of a hit in the overall market and still do very, very well. But obviously, we're hoping to see things just maintain these current levels. Okay, that completes kind of the open trade summary. The rest of this presentation is going to be on closed trades. All right, now let's look at the expiration for last Friday, which would be our closed trades. On this watch list, we had 22 trades and 18 of them finished profitable. Our stock win rate was 64%, and the average stock gain was 5.9% compared to the S&P at 2.1. So pretty close to 3 to 1 on the average stock gain on the watch list. And then we can see that the average trade gain, which again includes the option premium, at 6.7%. So this is obviously a very strong week and something that helped to kind of pad the rate of return numbers since inception. So now we're going to look at more of a historical look at the way our the stocks on the watch list have compared to the S&P 500. I started tracking this back on with the expiration on May the 23rd. So this would have been for entry in late April. I'm doing this all the way through present. So there are 17 weeks where we have closed the trades already. In 16 of those 17 weeks, the stocks on the watch list have outperformed the S&P 500. And then for the 3 open trade weeks, those are also beating the S&P. So I am thrilled with the way this watch list is performing. For more information on kind of how I choose the stocks, which clearly have been very effective, you can look at my videos on YouTube, and you can find them by searching SpreadEdge Capital. And finally, let's look at the actual trade performance in my personal account versus the S&P 500. Now, keep in mind, as we've seen through these watch lists, I generally have about 20 trades on the watch list each week. I'm personally choosing 5 and trading those in my personal account. All the returns here are based off of actual trade performance, with the one exception of the purchased puts, which make up the put credit spread, and then the purchased puts for the protective puts, which I am modeling. I believe this to be very accurate, but I am not doing those myself, and therefore do not have actual trade results. Anyway, looking at the covered call naked put return, because that's the strategy that I use, we are just under 80% since inception. And that is well over my benchmark or my goal of 2.4% or 2.4 times the S&P 500. I do offer two different, very different newsletters to subscribers. If you buy one, you get the other one for free. So one price gets you both newsletters. Of course, this whole video has been over the bull strangle strategy, which is the stock and option strategy, but I also have a commodity futures newsletter, which specializes in seasonal spreads. You can get both newsletters for the low monthly price of $49, and I offer deep discounts for 3 months, 6 months, and annual subscriptions. The annual subscription actually is a 35% discount. And for a limited time, you can get your first month for just $1. So you can try before you buy.